Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. I'm hosting a multi-state operator panel on the 15th of May. We'll be discussing a lot of what this article is going into in terms of all of the cash flow deals coming from Canada down into the US, as well as the multi-state operators who are looking to expand. There's a lot of international presence, a lot of opportunity, but there's timing. Right now, the valuations, the speculation, the consolidations, all of that is driven on time. And 18 months from now, that'll shift. So right now, there's a lot of money being driven into beverages in Canada as the edibles go online and concentrates become legal in Canada. A lot of investment is being driven in that direction. In the US, you're still seeing multi-state operators because that's a play on land and real estate. You're seeing data because that's always valuable. What you're not necessarily seeing is consumption lounges. Ultimately, there's going to be a huge influx of cash as people try to buy up more and more opportunities, whatever that opportunity is, if it's data, if it's a multi-state operator, if it's a producer, processor, retailer, or consumption lounge. Either way, money is going to be flowing, but the valuations will shift with time. The demand will shift. The regions will shift as globalization picks up and national legalization in the US. People will start to pick better territories for better products. Puerto Rico will be a manufacturing destination for anybody trying to take something from an agricultural community to make a finished good. Their tax offerings down there are bar none. And so you'll develop regions where California might grow, Puerto Rico might manufacture, New York or Vegas might sell the most. Things will start to play out, but it's all going to be influenced by that capital, and that capital is shifting. It shifts all the time, and the speculation, the margins, the pricing, everything is going to start coming in waves and shifting, and everyone should be prepared for that. They need to be nimble, but they need to be active. Most importantly, people who are thinking that there's going to be a legacy are going to be left behind while everything else is being consolidated. Curaleaf notches the largest U.S. cannabis acquisition with nearly $1 billion deal. The Massachusetts-based cannabis company Curaleaf Holdings announced Wednesday it agreed to purchase a leading West Coast cannabis oil manufacturer, Cura Partners, in an all-stock deal valued at about $950 million. Curaleaf's move to acquire Cura Partners, which owns Select, the leading cannabis brand in California, Nevada, and Oregon, according to independent market analysts, marks the largest deal based on dollar volume so far between U.S. cannabis operators. The company also stressed that it will combine Curaleaf's East Coast footprint with the West Coast focused Cura Partners to create the largest U.S. cannabis company by market cap and combined 2018 sales. The combination of Curaleaf and Select is a perfect fit, Curaleaf's CEO said. With our industry-leading capacity, expansive retail distribution network, and Select's impressive sales and marketing capabilities, they intend to meaningfully accelerate their top-line growth strategy with the addition of the Oil Select product range. The deal follows a wave of consolidation in deals in the cannabis space that was headed 2 weeks ago by an agreement reached between Canada's Canopy Growth and U.S. multi-state operator Acreage Holdings. That deal was valued at $3.4 billion on the day the agreement was announced, provided a path for Canopy to access the U.S. cannabis market, which is roughly 10 times as large as Canada's. The agreement, however, is contingent on whether the sale of cannabis in the U.S. becomes federally permissible. After an expected close of the Curaleaf Cura Partners deal in 2019, the combined company will have a presence in at least 15 states. The merger is expected to drive cost savings, including a 25% reduction in the processing costs and a 50% drop in Select's material cost. News of the deal drove Curaleaf shares up 15% last Wednesday afternoon following the deal's announcement. Cannabis vaporizer company Pax Labs raised a benchmark $420 million in funding. Pax Labs, a San Francisco-based maker of vaporizers, confirmed it raised $420 million in equity financing, a record for U.S.-based cannabis company. The firm said that the round included both new and existing institutional investors, including New York-based Tiger Global Management and San Francisco-based Tau Capital Partners. Pax raised nearly double the previous high for a U.S. cannabis company, a $250 million debt financing by California-based multi-state cannabis operator MedMen in March. This financing round allowed them to invest in new products and new markets, including international growth like Canada, and exploring opportunities in hemp-based CBD extracts. According to technology publications The Information, Pax initially sought to raise about $150 million, but surging interest from investors boosted that figure. And it's a further signal that the floodgates are starting to open, given that institutional investors have invested. That's not stopping the explosion of cannabis companies going multi-state and filing IPOs. As another billion-dollar U.S. cannabis company is going public in Canada, this one will trade on a little-known Toronto NEO exchange. Columbia Care, which has operated in 14 states and territories plus Malta, will begin trading Monday on Toronto's NEO exchange under the symbol CCHW. The company will list via acquisition by Canaccord Genuity Corp., a specialty purpose acquisition company, with a valuation of about $1.4 billion. NEO considers itself a mini board exchange and has more stringent listing requirements than the CSE, according to the exchange's chief executive officer. For Columbia Care, the NEO offered a smoother pathway to a potential listing on the New York Stock Exchange or NASDAQ if U.S. laws change, because its listing requirements are closer to those of the big boards. For now, the Canadian Stock Exchange remains an undisputed leader in U.S. pot listings, with about 65 such companies trading on the exchange. Hopefully they'll keep up on their testing. There's a lot of pesticide residue and issues with salmonella, E. coli, mold. And you'll see billboards where it says mold to gold. And so people are buying flower at very inexpensive prices and then turning it into either joints or extracts or oil, products that you can't see. And so it's going to become even more crucial to know what you're buying. And yet in Canada, what we're seeing is an anomaly to all other trends in every other market that we've seen, which is a decrease in the number of sales of concentrate. That can only be attributed to high prices coupled with low quality. It's the only reason that you would see a decline in the number of sales. The convenience factor overrules black market in most cases. I'm just talking about trends. You look at all trends in every market, and the number of people buying concentrates goes up. What we've seen in Canada is a break from the norm. It's an anomaly. It's a break from all trends in all markets, which is a decline in the amount of sales for concentrates. So I think what you're going to have is maybe increased education or increased quality with a decrease in price. Otherwise, places like Brazil are going to take over. I've got a client with 124,000 hectares. That's over 300,000 acres in Brazil. That's for CBD. But once international legalization takes hold, you can look at the future and see what's going to happen. I think that places like Brazil are going to be the agricultural hubs. You'll have processing hubs like Puerto Rico that offer 4% corporate tax cap and 50% tax credits and 100% tax exemptions. People will process there for export into the U.S. With finished products. So Canada is going to have a huge amount of competition if they don't quite figure out their quality control. Brazilian cannabis import authorizations topped 1,000 in the first quarter of this year. Brazilian authorities continue to approve permits to import medical cannabis at an increasing rate through the first quarter of 2019. In addition to Brazil, we're also seeing an excessive amount of production coming out of Colombia. Clever Leaves, for example, out of Bogota, is producing 55-gallon drums of oil like it's going out of style. So eventually we're going to see the Walmart of cannabis coming out of Colombia. Puerto Rico might be the processing hub of the world as long as the U.S. is their end destination. You'll see agricultural hubs like Brazil continuing to process flour. And so you're going to start to see regional hubs throughout the world. And it looks like Brazil and Colombia and Canada are leading the way. Canada is gearing up for edibles and extracts, which is going to provide a huge opportunity for companies to be able to private label or white label. And so white label cannabis products could play a huge role in Canadian cannabis extract markets. Analysts anticipate that white label cannabis products, those manufactured by one company for branding and marketing by another, will play a key role in Canada's cannabis extract market as companies look for ways to capitalize on the crucial segment without breaking the bank. Canada will allow the production and sale of marijuana edibles, extracts, and topicals later this year, with some estimates anticipating that those products accounting for more than 50% of the total cannabis market. Extractors have the opportunity to become the indispensable white label partners and unload some of the burden of growing pains that licensed producers are currently experiencing. Extractors are positioning themselves to provide turnkey white label solutions for vape pens, edibles, beverages, and other extract products. Cannabis startups spark joy for investors. 1 year ago, Crunchbase News published a quarterly report on the cannabis industry in the wake of recreational legalization in California, one of the largest markets for adult use in the world. Investors and companies were excited about the future of the industry, yet remain wary of the regulatory challenges that remain for both consumers and entrepreneurs. Now, 1 year and a key resignation later, the industry continues to light up. According to Crunchbase data, funding for cannabis companies more than doubled from 2017 to 2018, with more than $1.3 billion directed towards startups and other private companies in the industry last year. Though dollar volume in Q1 2019 was slightly lower than the immediately preceding quarter, it was still double that of the year-ago quarter. However, private market reporting lag may account for the quarter-over-quarter decline. Taking a closer look at the largest rounds for cannabis startups since 2017, many of the top 15 rounds were directed towards companies that touch the plant. That includes a $90 million round for grassroots cannabis in March of 2019, a $75 million round for cannabis brand Caliva, and a $125 million round for cannabis producer and distributor Flow Canna. According to managing partner at Casa Verde Capital, it's not surprising that cannabis startups touching on cultivation, manufacturing, distribution, and retail are announcing large funding rounds. These are really capital-intensive assets that need a lot of dollars. Interstate commerce regulatory requirements also add to the cost of supporting cannabis startups. Cannabis companies that want to distribute to multiple states must have centers in different states, which often means acquiring or starting subsidiaries. In short, regulations are hard and expensive to navigate, but those willing to do so now may see a large pay for their efforts. There's also room for institutional investors who have largely avoided investing in the production of cannabis for legal reasons to invest in cannabis-adjacent startups. Cannabis job recruiting platform Vanx had raised $12.5 million as a good example. These ancillary companies represent a lot of opportunity in terms of scale with less legal risk than other angles, according to a principal at Lear Hipua, which has invested in companies that are developing CBD and hemp solutions. And with more cultivation companies going public in Canada, it's likely that this interest will grow as private valuations do too. Why is Wall Street so skeptical of cannabis stocks? There are no shortage of reasons behind Wall Street's cautiously optimistic approach to cannabis stocks. To begin with, there's supply chain issues galore in Canada. These supply concerns have manifested in 3 separate ways. First, there's an insane backlog of more than 800 applicants that Health Canada is contending with, most of which are cultivation licenses. Many of those applications can take from months to more than a year to review and approve. This is leaving potential growers twiddling their thumbs on the sidelines. Second, there are packaging constraints that are causing a major headache. Health Canada laid out specific guidelines on what growers and retailers need to do in order to get product on dispensary shelves. Packaging needs to be child and tamper resistant as well as contain certain warnings and labels. Right now, there just isn't enough compliant packaging in Canada. Third and finally, it's going to take a while before growers are operating anywhere near peak capacity. Cannabis stock income statements haven't given Wall Street much confidence either, although analysts and investors have had something of a heads up on the industry's supply chain issues. They've still been blindsided by some stunningly large losses or less than stellar returns. Last of all, the constant issue of new shares to raise cash by most pot stocks has probably given Wall Street reason to contain its optimism. For example, Aurora has issued 1 billion shares of common stock over the last 4.5 years and is going to have a very hard time generating a significant per share profit or earnings per share EPS as a result of its share-based dilution. As much as investors would like to see Wall Street becoming increasingly bullish on cannabis, pot stocks haven't given analysts any reason to change their tune. A group of nuns are raking in 850,000 pounds a year, turning a covenant into an international cannabis operation. Today, the business is flourishing and the community of nuns have high hopes of expanding their medical marijuana empire. Unlike most cannabis stocks, this one's actually making money. Organigram Holdings is a Canadian company that grows and sells medical marijuana. Its products include various strains, oils, and even vaporizers. What the article doesn't go on to say is that Organigram is making 40,000 joints per day, pre-rolls. They're manufacturing 40,000 pre-rolls per day, not necessarily just for the Canadian market, probably for exports. There's 70,000 people in Germany that have access to insurance that will pay for medical marijuana. I'm not sure what the legal rules are, but essentially, if you can manufacture 40,000 pre-rolls a day, it's definitely not going to be for your town or your municipality, your province, or even your country. You're probably looking at global exports. And so this company definitely knows that pre-rolls are the number one product sold and that a lot of people are buying them, and so they've invested heavily. Not many people are talking about it, but it is definitely interesting how many they're manufacturing, and is obviously not for the local market. So stay tuned with Organogram, the ones making money on the back of pre-rolls. Is now the right time to invest in cannabis? Cannabis stocks appear to have lost their charm from a few months ago. The sector has been moving sideways since March, and some cannabis companies' quarterly results failed to impress. Canadian market supply shortages, poor earnings, and delays in retail cannabis outlet openings, and the United States' slow legalization of cannabis have all weighed on the cannabis sector this month. The cannabis sector struggled in April with just a handful of major stocks staying positive. March was similar, with cannabis players largely moving sideways. Among the cannabis sector players, Tilray is the odd one out, but it's the only stock trading lower than it was at the beginning of the year. The stock's fallen 25% since this year and 19% this month, whereas Aphria has also fallen this year by 19% and risen a healthy 29% this year. Canopy Growth gained 15% in April and 86% this year, while Aurora Cannabis has been flat in April but returned 79% this year. Hexo stands out amongst its peers as one of the few stocks that has risen consistently in each month of the year and has risen 19% this month and 123% this year. Predicting the future for 5 top cannabis stocks. The major volatility in cannabis stocks, with some falling short in recent weeks, may present an ideal opportunity for investors to buy on the dip. 5 stocks positioned to outperform include Aurora Cannabis, Canopy Growth, Hexco Corp, Charlotte's Web Holdings, and Tilray, according to several analysts. While the cannabis industry's related stocks have soared in 2019 with the ETF MG Alternative Harvest and Horizon's Marijuana Life Science Index up 44% and 53% respectively year to date versus the S&P 500 17% return, many individual cannabis stocks have fallen recently due to the myriad of concerns. Headwinds include broad industry uncertainty. Cannabis remains illegal in the U.S. federal level, and investors face uncertainty surrounding revenue, supply constraints, and quality issues. All of these stocks have experienced wild swings in the past year. In recent weeks, Aurora Cannabis and Charlotte's Web have pulled back, while Canopy Growth and Hexco have surged during the same period. Tilray spiked in November and January, only to see more declines this year. Bank of America's Merrill Lynch analyst prefers Aurora Cannabis, Canopy Growth, and Hexco, initiating coverage on all 3 with buy ratings in April. While the infrastructure of the cannabis industry hasn't been quick enough to keep up with the rapid increase in demand on the back of legalization of the plant in Canada and other jurisdictions, Bank of America sees the issue as a temporary one. They think that the distribution channel constraints in Canada could prompt companies, namely larger ones with capital, to seek strategic action in international jurisdictions, including potential deals in the United States and Europe. Cannabis stocks are likely to face more market choppiness due to regulatory concerns and other risks, such as difficulty in meeting demand and quality standards. But those focused on the long-term growth opportunities of the budding industry are undeterred. Those willing to take on the risk may profit from a legal market expected to reach tens of billions of dollars globally. Yahoo Finance is reporting on high income, 4 ways you can make money off legal cannabis. Cannabis sales worldwide are expected to hit nearly $17 billion this year, according to ArcView Market Research and BDS Analytics, which track the industry. And that boom has been helped by the legalization of cannabis in Canada and a growing list of states. For those who are looking to profit from pot, either through investments or other means, the time is now. Here are 4 ways to make money from legal cannabis. Number 1, investing. The cannabis business is no longer an underground network. Instead, you'll find cannabis-related companies listed on major stock exchanges in the United States and Canada. Several larger cannabis companies in the U.S. have been attracting venture capital money, and the world's first cannabis exchange-traded fund, or ETF, now includes more than 4 dozen stocks related to cannabis. There's 2 other ones, so that makes 3 ETFs that you should look at. An ETF, or exchange-traded fund, is a nice option because rather than just being stuck to one volatile company that could go up and down, you're looking at more of a portfolio, and so that ETF is a little bit more safe. The ETF MG Alternative Harvest is up almost 50% year to date, so that might be a decent one. There's another one that just launched last week. So you might want to take a look at all 3 of those. Number 2 is crypto and blockchain. The weed industry is looking past the initial hysteria and speculation over Bitcoin and over digital currencies and is seeking important uses for the underlying blockchain technology. For cannabis dispensaries that have been shunned by the traditional banking system, blockchain provides an alternative to doing business only in cash. Problem is you need a money transmitting service like PayPal in order to get the money to blockchain. Whether you're using Coinbase or otherwise, that platform just doesn't have money come out of nowhere. So you still need a way to get your fiat currency to that end destination so you can buy Bitcoin or otherwise. I recently had a meeting with an individual who's working with a couple Canadian companies trying to implement a blockchain system for settlements, so there doesn't need to be an actual wire of funds or any cash involved. It's more like what the big banks do. They just settle funds at the end of the day. There's an open window, and then if they need to borrow, that's an opportunity as well. And so with this meeting, it was interesting because there are Canadian companies that want to settle in blockchain and use cryptocurrency if they can. There's some publicly traded companies in Canada that like to use blockchain and Bitcoin for settlement between companies and even for borrowing purposes. So I think we're just kind of on the cusp of what we can do with it. It's already been a great addition for accounting and settlements, but in terms of an alternative currency, that whole thing hasn't even begun yet. So should be interesting. Number 3 is entrepreneurship. Legal cannabis offers practically endless startup opportunities for those that want to dive and innovate. If cannabis can be sold legally where you are, you could explore opening a retail store focusing on cannabis oils or edibles, or paraphernalia shops offering the right tools for getting a recreational high. Might sound obvious, but if you're interested in the industry, you should probably join as many groups as you can. Try to get out and get your face involved in the industry as much as possible. Meet and greet and see as many businesses that are open and try and fill the need or gap, whatever your specialty is. Number 4, lucrative jobs in the industry. A report from the cannabis website Leafly and Whitney Economics say that the U.S. now has 211,000 full-time legal cannabis jobs, including more than 64,000 that were added in 2018. Pre-rolls or joints are still one of the number one items sold, and those pre-rolled or dude tubes, as they're called, they generate a lot of waste. And so there needs to be an opportunity where they're not considered an open container, where they can be brought to a facility and recycled. So until we can come up with a solution, we're all part of the problem. So this topic is going to become more and more important as countries like Canada roll out legalized options. They're implementing packages that may not be sustainable, like a 1 gram joint. Right now they have a 1 gram joint that has an excessive amount of packaging that's really unnecessary, not only to the customer, but to the environment as well. There's a lack of options when it comes to recycling those. A lot of states consider that to be an open container. And so there's an issue when it comes to not only being able to just throw it in your recycling bin, but then to actually have it be recyclable. And so there's a dichotomy between the producers and processors of these companies, the brands that want to have an experience, an Apple-like experience, where you pull out the product out of a box and then out of another box, and then finally you have your plastic tube. Difference is this isn't a software, or this isn't really something that you're going to keep for a while. This is something that you're literally going to burn and then throw away. And so the excessive amount of packaging is becoming more and more of a hot topic for people to talk about, to reduce the amount of packaging, reduce the amount of waste, and then pass on that savings to the consumer. Canada is at least offering half of a solution, which is to provide a place where people can bring back their packaging to be recycled. But until the manufacturers can figure out how to package with less packaging. So right now up in Canada, they can recycle the outer packaging and inner packaging, the tins, the joint tubes, plastic bottles, plastic caps, flexible plastic bags. More states are approving cannabis sales, and new waste processing solutions are coming online, but federal regulations still loom large. So how is the waste industry keeping up with an ever-growing cannabis stream? Today, most cannabis waste goes directly into landfills, but rising awareness around organic waste processing could start changing this approach. Congress recently approved the 2018 Farm Bill, which prompted a national conversation on hemp and its sister plant, cannabis. The bill permits expanded hemp cultivation and allows for expanded sales of hemp-derived products, the expected increase of which will introduce more organic materials into the waste stream. One group working to address these organic waste goals is the U.S. Composting Council. At their 2019 annual conference, the vendors and operators discussed the compostability of the organic waste stream, Processing cannabis residues, including stalks, stems, and root balls, produce a compost product similar to any other green waste. However, limited availability of accessible compost facilities generally force cannabis grow operators to combine the organics with other facility trash and landfill the mixture. While many of these areas are still evolving, one thing clearly won't change with regard to cannabis regulation. Somewhere right now, there's a state talking about legalization, updating rules and regulations, and preparing to issue licenses to cultivating facilities, processing operators, and dispensaries. All of this activity creates new opportunities for waste and recycling service providers to find ways to work within those complex systems. With Earth Day recently passing us by, it asked the question, is cannabis farming sustainable? Mass industrial agricultural practices are heavily debated. There's always theories and opinions about how cannabis production is more sustainable or how it should be used, including the various types of cultivating, whether it's indoors or outdoors, greenhouses or otherwise. Sustainability issues always come up, whether it's to increase water efficiencies, energy efficiencies, or pesticide-free growing options. Bottom line is cannabis cultivation consumes a massive amount of energy. CBD really led the charge against the cannabis stereotype of the lazy stoner. The active cannabis lifestyle campaign with CBD driving the way has really kind of led a new foray into the markets, whether it's CVS or Walgreens. Locally here we have Bartell Drugs. There's a lot of these companies that are promoting a wellness campaign, and it's not only for seniors, but it's for active individuals that are looking to recover from high intensity interval training or just running, golfing, whatever the activity is. Last fall, I used a transdermal CBD patch to climb the Space Needle in Seattle. It's about 50 stories. I did it in about 10 minutes and wouldn't have been able to do it without the CBD. The quick intervals of pain I did feel were excruciating, to the point where I don't think I would have been able to do it if I had that pain the entire time. There's a tremendous amount of benefit that one can receive from taking CBD and or THC. At the gym, for example, it gives me some focus. It reduces the inflammation and the pain that I have in my shoulders and neck and everything from sports injuries. And so I think with cannabis, it can help runners get into that zone. For me, it helped me climb the Space Needle maybe a little bit quicker without having to think about every pain, every step. And so it gives you a little bit more of an edge as a performance enhancing drug. From metallic vapes to prismatic shapes to pre-rolled joints packaged in jewel boxes, the world of marijuana has never offered so many options for today's tastemakers. Weed might also be good for athletes. In California particularly, there's a market that's exploded ever since recreational cannabis became legal over a year ago, and most intriguing and enterprising new brands that are focusing on the wellness benefits rather than the buzz. So thanks to CBD, cannabis is getting its glow up, trading in the stoner image for a new one as a luxury wellness and beauty ingredient. Loosening of cannabis laws and the enthusiasm around the emerging science has legitimized the medical claims surrounding CBD. If you were planning to wait out the CBD trend, you may want to reconsider. The American CBD market now could reach $16 billion by 2025. By now you've seen everything that's infused, a version of mascara to intimate lube, but not nearly about what it actually does. So will it de-stress you? Will it give you great skin? Can you get high from it? And if not, why do people care about it so much? Topical CBD's most enticing attributes are its anti-inflammatory and analgesic properties, which is why the ingredient is popping up in so many face creams, serums, and body lotions. Inflammation is the root of all evil, whether it's acne or the signs of aging. As it turns out, CBD might be the ticket to that too. For those people who can't or don't want to pop pain pills, topical CBD takes down the ouch level and reduces swelling. That's why we're seeing it in so many rubs and balms used for achy joints or sore muscles before and after workouts. So what's next in the world of cannabis beauty? Terpenes. Terpenes are the part of the cannabis that makes it stink, though there are some very pleasant ones like limonene, which smells citrusy, and pinene, which smells like Christmas. In a nutshell, they're kind of the essential oil of cannabis. Research suggests that terpenes in cannabis may work synergistically with cannabinoids to enhance medical effects. Will cannabis help you work out? Runners have long talked about the high they get when they work out, releasing endorphins that cause a euphoria. Some athletes tout the benefits of cannabis as a performance-enhancing drug that relieves pain and inflammation and even helps restore focus. They generally fall into two camps split over the two main compounds found in cannabis, CBD and THC. One camp says that CBD handles the heavy lifting of recovery and focus that the THC's psychotropic properties impede workouts. The other argue that THC not only brings greater clarity, but also works with CBD to create synergy among multiple cannabinoids or terpenes, known as the entourage effect. Already a growing number of athletes consider CBD a key part of their regimen, and because of these early adopters, many people's interest peaked on CBD and its proposed benefits. Advocates say that it helps with a wide variety of conditions from anxiety to insomnia to inflammation and nausea. Because of the workings of the endocannabinoid systems, there are at least a theoretical basis for these claims. The endocannabinoid system is found in every organ throughout the body and controls many physiological processes, including food intake and energy balance, learning and memory, and pain processing, to name a few. It can affect everything from emotion to pain to appetite to energy metabolism to brain function and even immune systems and inflammation. When you have a system that crosstalks with all those pathways, then there's very few things the endocannabinoid system does not influence. One of the biggest stumbling blocks to widespread use of CBD is price. High-quality tinctures cost $35 or more. The bottles contain enough tincture to last about a month if you're using an eyedropper's worth per day. As more and more companies get on board, these prices will drop and become more available to the average consumer in the same way that Gatorade is supposed to increase your energy. And with that, we're going to wrap this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.